Welcome and welcome back to Money Talk Tuesday. We are with EF Financial and we're going to go over the American Rescue Plan and getting back to work.
Okay.
As you know, this is our quick little agenda. We will go over about OEE, go over some disclosures and housekeeping. You'll see a sneak peek of what we're going to do next week for Money Talks, and then we'll hop right into it. So about the Office of Economic Empowerment, also known as OEE, is a department within the Office of the Treasurer and Receiver General and Massachusetts tasked with supporting, advocating, and facilitating policies that empower all Massachusetts residents. Our programs serve women, families, high school students, veterans, and seniors. Our priorities include closing the wage gap, increasing access to financial education, improving affordability, college affordability, and investing in STEM careers and education. So this is a Zoom webinar and will be recorded. The recording will be uploaded onto a public site for future use. And just so you all know, this webinar is also being streamed live on our Facebook page. Any information shared through the question functions will be anonymous, but please note, however, the chat record is subject to public record laws and as such is not anonymous. Like I mentioned before, this is a webinar, not a meeting, so you will not be able to view other participants, and the host can call on folks to answer questions. You can also use the chat feature to communicate to us, the host and the panelists. The Q&A option will be available throughout the webinar, and please be sure to stay till the end because we do have an exit survey. And like I mentioned, next week we'll be joined by Elsa Martinez Pimentel and Robert J. Miller to go over deciphering those financial award letters. Same time, same place. You can register at the bit.ly in the invitation, and I'll be sure to include that in our chat so you guys can register for that. If you have any questions, comments, concerns, you can always email us at moneytalk@tre.state.ma.us. And without further ado, I will hand over to our panelists for today.
Great, thanks, Shai. So we're so excited to be here. Erica and I were given the opportunity to work with the OEE just about a year ago, Erica. Remember when that first stimulus check came out, or the CARES Act was available?
Sometimes it seems like a week and sometimes it seems like 5 years, but yeah.
Unbelievable. I mean, when you think about how different what different state we were all in at that, there was so much uncertainty out there. The unemployment numbers were unbelievable. We didn't really know what this virus was going to do to us or how it was, how we could protect ourselves. And it was so scary. Our children were home from school. The entire world was shut down. I mean, who ever thought in our lifetime we would have had such an experience? But here we are. You and I were talking yesterday about how we are probably leaving this pandemic much different than we went in. If you think about mentally what we've been through, if you think about what it's done to us, and from that perspective, what it's done to our children, socially, how we've been so confined. Physically, I don't know, COVID-19, we all know what that's about, right?
So many ways.
And then financially, of course, I think without a doubt, this pandemic has impacted us all from a financial perspective. And really excited to be given the opportunity to talk about this third stimulus package, the American Rescue Plan, because I think one thing that our lawmakers have done is done everything they could to help support us and keep our heads above water and provide us with these stimulus programs to help us get through this. I feel like we're at the end of it. Vaccines are available. Kids are back in school. I'm so happy about that. And I personally see like a light at the end of the tunnel. And I think this final stimulus package is going to get us to where we all want to be, where we see ourselves coming out at the end.
Well, we're going to go over, but there's so much life-changing things, I think, in this rescue package. It literally is a rescue package.
It is a rescue package, and it's gonna get us through. As we know, March 11th, President Biden signed into law the American Rescue Plan. $1.9 trillion is what this plan was made up of. I mean, did you know that if someone gave you $1.9 trillion, Erica, you could spend $1 million a day for around 5,700 years? That'd be nice, right? Or I was thinking like 1.9 trillion seconds is like 60,000 years. I mean, this number is
An
phenomenal.
immense number.
It is like you can't even,
Unfathomable.
right? But I think the ability to be able to provide this to American citizens is going to be such an enormous financial boost to us all. And this package is much different than the other two for many ways. And one of the ways I think that this administration approached this was like, okay, let's give a stimulus, an immediate stimulus, but let's also see what we can do to help improve income equality in America. And we're going to talk about those differences and how there's something for everyone in this package, both immediately and over the long term. So I know, what's the first thing you think of when you think of the stimulus package, Erica? What's the headline here?
I mean, of course, people think about, how soon are they going to be able to collect that check, put the check in their pocket?
Right. So we all know we're getting a check. I know we have a poll question, Shai, about whether or not individuals have received their stimulus payment. It's really funny, when we did this a year ago, this was like when we knew the stimulus was coming, I was asking everyone, did you get your check? Did you get your check? It was like such a topic and an exciting topic of conversation. I actually really haven't talked to anyone. I haven't asked the question. I haven't asked my mom if she got her payment yet. So I'm just really curious.
I'm the same way. I have not heard anyone say, oh, I got my stimulus check.
Yeah.
So I'm interested to see what these poll questions, how they're answered, because it just, I don't know.
It'll be interesting, but
I'm certain no one's taking them for granted.
No, absolutely not. So I'm curious to see how that poll question turns out. What do we got here? Oh, okay. So about 53% have received theirs, and we still have 40% who haven't gotten it or don't qualify. Okay.
But no one's not sure. So that's comforting.
Yeah, that's good. So just as a reminder, especially for those who haven't gotten it, the stimulus payment this time is the most generous. It's $1,400. So you have to be qualifying in regards to your income, but the income limits, if you make under $75,000 as an individual or under $150,000 filing jointly, you would have gotten the $1,400 per person. And the phase out for that is a little lower than they have been for the prior stimulus payments. So the phase out, if you make over 80 as an individual and 160 as a joint filer, you did not qualify for the payment. And so know that for that first stimulus check, for example, the phase out was about 100,000 for an individual and 198,000 for a joint. So if you're questioning whether or not you got a smaller payment or no payment this time around, maybe understand that the phase out limits were a little bit lower this time around. Some other things that are different about this one, making it a little bit more generous, is those dependents 17 and older. You got to check for them this time around. So if you can recall with the prior two stimuluses, if you had a dependent that was 17 or older, you didn't get any money for that individual. This time, everyone 17 or older that you claim as a dependent, you do get that check. And mom and dad, just so you know, you as the filer get that $1,400. Don't worry, your 17-year-old isn't getting a check to put in their pocket, because I'm sure they would spend it much differently than you would. So know that you as the filer are getting that check. Also good news, if you're planning to have a baby this year, or if you're right on the cusp, do what you can to get it born this year, because you will get a stimulus check for them, and that will be reconciled when you file your taxes next year. And just an FYI, if you haven't filed your taxes yet and you had a baby in 2020, you retroactively can reconcile stimulus payments for those children born in 2020 as well. So keep that in mind as you file. And as a side note, Erica, what do we know about the tax filing deadline this year?
It was extended May 17th.
Right. So normally it's April 15th, but thank goodness we have another month to be completely disorganized in this world that we're trying to
I do today what you can push off till May 17th.
That's right. So That's pretty exciting. If you haven't, for those of you who haven't received your check yet and you're curious, what you can do, and I actually did this yesterday, you can just Google IRS, where's my refund? And there's like a status checker. It'll tell you, where your check is. So kind of check that out and see what you're doing, where that payment is if you haven't received it, for those of you who haven't. So one of the things that we wanted to talk about, as we think about receiving this money and how it's helping us keep us afloat and get us through that next phase is, what are you doing with this money? We have another poll question that we're very curious about as you've been getting these stimulus checks, or more specifically with this particular stimulus check. What are you doing with the money? So if here's some options, if you have plans for your payment, let us know what you're doing it. Are you going to be building an emergency fund? Are you going to be investing it in retirement, paying up debt, saving, or investing it in something else, or combination of the both? Or
Rachel, taking a vacation after
Right.
after everything's lifted is not on this list.
I know. And I will talk about this, but one of the things I'm going to encourage everyone to do is buy yourself something nice. I mean, we all deserve a little bit of something after getting through this. So I know we should have thought about that as a very viable response to that. So I'd be very curious what people are planning to do. But I think regardless, we all deserve something, like a new pair of sandals this summer or something, a little something.
Yeah.
Deserve a treat. So we often get asked, like, what should I do? I have this money, I'm working, I have, cash flow into the household. What should I be doing with this? And Eric and I have always been, we've worked with people about their financial planning and cash flow issues. And we're going to tell you what we think is the best order, ways to look at this if you have the opportunity. But before we do that, let's just see. Oh, look at that. Paying off debt is the number one plan that you guys have at 35%. And then combination of some of these methods is next. Saving or investing for something else. Maybe that's the vacation. I guess we could put the vacation in that category. Investing for retirement, building an emergency fund in 12, or not sure. So we're going to talk to you what we think is kind of a good strategy. So and maybe you've done some of these things in this order, and then you're going to position yourself very well financially. But I think number one, take this opportunity to build that emergency fund. And I think it's something that as Americans we have a very hard time doing. We know we need one, but we've never really have an opportunity to do that. So maybe this final payment is allowing you to build this emergency fund. And I think it's very important in case your car breaks, in case your boiler needs to be replaced, that you're not putting yourself in this unfavorable financial situation because you don't have an emergency fund. So that's the number one thing I would do. And I also would recommend that you put this emergency fund in an account that you don't have a checking available on it or a debit card access to. Put it in a safe savings account that you can't just happen to tap into at any time. You have to be very methodical in accessing those funds.
What's good for those we like to use are those online checking accounts, whether it be with, there's a bunch of them, but there's a little barrier between you getting the money and spending it. You have to request it. So it takes a couple days and it sort of, puts it out of reach. So those are really good tools to use for your emergency fund.
Yeah. And one thing you and I have always done, and I still do this. I've done this forever. If you're thinking about making a good purchase, go home, wait 24 hours. If you're to make a big purchase over whatever, say it's like $100, $200, go home, think about it for 24 hours. And oftentimes you don't really go back and make that purchase after all. So it helps take away that immediate want to spend money. The other thing I would do, the second thing I would do is pay off debt. I think that's really important. And it's really amazing. I think Americans are paying off debt and saving more than they ever have. The numbers are pretty staggering. What a good job we're doing during this crazy time. But I think paying off debt is the number two priority. You and I, Erica, we've always talked about paying off debt, and there's many ways to do it, but what do we always talk about doing first? Paying the
well, everyone likes that instant gratification. So you take your smallest bill, your smallest credit card balance, and you pay that one off first.
Yeah, I kind of think it's if you go on a 30-day diet, you're not going to wait till the end of the 30 days to weigh yourself, right? You want to weigh yourself every day to motivate you to keep not eating all these wonderful foods that you love. So we always say that, pay off the smallest one first.
Yeah, and then you can use that payment towards the next one up. But as important as that is, I think that this infusion of capital that people are getting, hopefully, if you had habits before the pandemic of growing debt, you would buy things that you couldn't afford. Maybe this is your opportunity to maybe emerge from the pandemic a little bit changed, or with a little bit more critical thinking towards racking up such debt.
Yeah.
And not let this opportunity slip through your fingers of building that emergency fund that you just talked about, that's so important.
I know personally, I mean, that's one of the areas which I'm coming out differently, right? I don't need to spend as much money on clothes or makeup or, getting my hair done as often. I mean, it's kind of freeing in a sense to know that, yeah, you can still survive and thrive and not put your money on those things that really aren't as important as we might have thought that they were. So again, a positive coming out of this. Thirdly, I would recommend, without a doubt, you need to save for your retirement. This one wasn't very high on the poll list, but if you're good, if you have this good foundation, your debt is low, you have this emergency fund, I think saving for your retirement is so important, because you cannot take a loan out to pay for your retirement, right? You have got to do that. If you have a 401k through your employer, 403b, what have you, start putting money. If you had to stop temporarily, start putting money back into that plan. Also, if you have a match, we always say this, Erica, if you have a match, you need to put in at least what that employer is matching you. Otherwise, in my opinion, it's like saying to the government, you know what? I don't need this stimulus check. Take it back. I don't want free money. I mean, that's kind of what an employer matches as well, right? So I think it's so important to, we've been through a lot, and we want to be able to have the same quality of life in retirement that you have today. And the only way you're going to be able to do it is to take care of your future self by saving more for your retirement. Don't forget to do that.
Oh, Shai has a question.
Oh, sure. We've got
Leah's asking, where should you invest your retirement funds?
So, I
And
mean,
then I have another one.
That's such a broad question. One of the things I would recommend, if you do have like an employer sponsored plan, or if you have an IRA account, I'm really a proponent of a target date mutual fund, because what it does is it looks at your age today and assumes that you're going to retire at the age of 65. And it's a sort of a one-stop shopping to invest your money. It'll invest the assets that you're putting into this mutual fund based on your age. And as you get closer and closer to retirement, it'll automatically get more and more conservative. So I know there's so many different companies that offer, they're usually called target date retirement funds. So it's like a target date 2040, a target date 2030, based on the year in which you're going to turn 65. I think that's a really good place to start.
I have just a strategy. Now, not everyone can take advantage of this, but if you already have that emergency fund and you already are, you don't have any debt, and you have this income that's come in, and maybe you're not participating as much in your retirement plan or contributing to an IRA or a Roth IRA as possible, you could take this money that you're getting, live off that, and then if you are employed, defer more of your earnings into your retirement plan, get the tax break for the contribution, replace it with the stimulus money, and now you've done even more for yourself, because you've saved all that money on taxes and you put more money in your retirement plan. So it is opportunistic if you can do it.
It's a very smart plan to financial success down the road.
Yeah.
And another question, how to minimize taxes on retirement funds? I don't know if that helps.
So I hope this will address the question, but we talk about this a lot. So if you're putting, let's say it's, again, your 401k, and you're putting money into a traditional 401k, and this also applies to an IRA under most circumstances. There are some exceptions. But the money that you put into your 401k, you are not going to pay taxes on that money in the current year. So we often use this. Let's say you make $50,000 and you put, I'm going to use nice round numbers, 10%, $5,000 goes into the 401k every year. When you go to file your taxes next year, you're not telling the IRS you earned $50,000. You're telling the IRS you earned $45,000. So you can see that you're paying taxes on less money. You're not paying taxes on the money that's going into that retirement plan. So there is an incentive for you to contribute. I mean, the government wants you to save and be successful, so they offer these incentives to contribute to your retirement plan. So that, I hope, is answering the question.
Of course, when you pull that money out of your retirement plan years down the road, when you're using it to live on, you pay income tax on it at that point. And the only way to save money at that point is if you were to donate that money to charity, make a charitable donation, then that would offset it. But other than you do pay the tax eventually, unless you use a Roth IRA or Roth 401k. And you might not get that tax, you don't get the tax break up front, but when you pull the money out, it's all tax free.
Yeah, with the Roth, you would pay taxes on the $50,000, but when you pull it out down the road. So there's a lot of technical details there, but there are opportunities, and hopefully you all are taking advantage of it. Any other questions, Shai? No. All right, Erica, what's next?
Not at the moment.
How much the stimulus checks added up to.
Right. So, Erica, if you took advantage of all the stimulus, so we've had 3 stimulus programs, 3 stimulus checks sent out. If you are a typical family of 4 and you qualified for all the stimulus, you would have received $12,200. That's huge. I mean, that's it could be life-changing, if you received this money. A family of 3, like a single mom with a couple of kids, you would have received $10,400 from the government. I mean, it is, I really applaud them for doing everything they can to keep our heads above water and keep us in our houses. And I think it's been, the amazing work our lawmakers have done. And I'm really, really proud of them for that.
It's life changing. And potentially a once in a lifetime thing as well. So I'm sorry, you said that amount was $12,000?
$12,200 for a family, a fully qualifying family of 4.
All right, so we're going to change topics now. We're going to talk about what is the second most important thing as far as impacting people's lives after the direct check in your pocket is the child tax credit and the earned income tax credit. So those 2 things are different, but I just want to piggyback on that $12,200. I'm going to get into a little bit what the child tax credit is, but take that same family of 4 and assume that the 2 children are under the age of, they're 5 or under. That family not only got that $12,200, they're going to also receive $7,200 in a child tax credit for the year 2021, bringing the total to $19,400. I mean, seriously, I working with people throughout our careers and knowing how bad luck can perpetuate bad luck and you never seem to get ahead, and how are you going to pay all your bills and save money? And like, we can't say enough, this is just a total
yeah, and we've seen it. We've seen such positive impacts on people. I mean, certainly there are people who don't necessarily have those outcomes every time, but I'm sure everyone would agree this has helped their families immensely, regardless.
So let's talk about that. What's the difference between the child tax credit and the earned income tax credit? So basically, the child tax credit is a credit for having a dependent child under the age of 17. And the earned income tax credit is a credit for low income earners with or without kids, it doesn't matter. It's essentially a wage subsidy. So that's the difference between the 2. You can definitely take advantage of both of them if you qualify. There are income limits on the earned income tax credit, so not everyone will qualify. And how has the the rescue plan changed that and made it so valuable to families. Okay, let's talk about the child tax credit. Prior to 2021, the maximum credit you could get per child was $2,000. And now it's $3,000. And if the child is under 5 or under, it's $3,600 is the maximum credit. That's a tax credit you can get. New this year is your 17-year-old child qualifies, whereas prior to that, the maximum credit you could get for a 17-year-old was $500. Second, it's fully refundable. What does that mean? Last year, the maximum you could get was $2,000, and it was $1,400 of that was refundable. So what that means is that if your tax liability was $400, or no, let's just say your tax liability was, $400. 1,400 of that you would get a check for. You would get it on top of the $400 credit for your tax liability. So see what I mean by it being refundable? You didn't have to pay it to get it back, but there was that limit on it. Only 1,400 of the 2,000. For 2021 only, by the way, this is a one-year rule, that $3,600 is 100% refundable. Not only that, last year there was an income limit. You had to have earnings of at least $2,500 to get the child tax credit. This year, you could be out of work, earn nothing, and if you have one child under the age of 5, you're going to get a refund for $3,600, even though you didn't pay anything into there. The lower your earnings, the more valuable this tax credit is. It's just like, I can't help saying it's just so life-changing and going to be very, very helpful.
Erica, how are we getting that? Am I getting a check, or are people getting a check for that tax credit, or?
Yeah, that's a really good question. So in the rescue plan, they've made the child tax credit 50% advanceable. What does that mean? So half of the credit they are going to pay to you over time, probably monthly, to begin no earlier than July and go and end in December, because it sunsets at the end of this year. So let's just take a family of 2 kids, one kid on 4 years old and one child 8 years old. Their tax credit, maximum tax credit, is $6,600. Half of that, $3,300, can be advanced to them on a monthly basis. That's $550 a month to help you as you're going through this year to help and pay those expenses that are affiliated with having children.
And you said probably they're still working out the details of this. Is that right?
So the rescue plan tasked the U.S. Treasury Department to come up with a system to pay these monies out to the people. Administratively, it's going to be quite a task. So just because it says July doesn't mean it's necessarily going to start in July. Hopefully it does, but we know it definitely needs to end in December. The other half you get when you file your tax return. And the reason is that, you don't want to overestimate what you are getting, and then they have to claw back that money.
Right.
There's going to be an IRS portal where you'll be able to update your status, like update your marital status, your income, your number of kids, and to make sure it's accurate.
Yeah, I would encourage that too, because like you say, if you had a change this year and you received too much money, come to find out, you don't want to put yourself in a position where you have to repay that. So definitely go to that.
There is a website out there where it's a calculator, and you can go in and put in your situation, and it will tell you how much you're going to get for your credit and how much you would get monthly. Oh, on this, on the portal, the IRS portal, you can opt out of the monthly payment if you want to.
And just get it next year.
Yeah. Okay. So Shai's going to put that portal into the chat, And you can go on at your convenience, and it also compares it to what you would have received last year, just to show you how much, you know, what you're getting
Right.
through that. Just one other note on the tax credit, the child tax credit, is it's not, everyone's not eligible. There are some income restrictions on the upside, and depending upon if you're married or single, it could be anywhere. If your income is 125,000 to 440,000, you might not be eligible, or it phases out. You'll be eligible for some of the credit and not
And it
all.
certainly sounds like it's eligible, you know, the income limits are a little higher than the stimulus checks, so it could impact.
Oh yeah, yes, yeah, because it's expensive to have kids, no matter how much money you make.
Yeah.
Earned income tax credit. Oh, do you have a question, Shai?
You're
I
on
was
mute.
muted. Sorry about that, guys. We have a question that's asking, again, how much is the credit and what happens if I already did my taxes?
Oh, that's a good question. Okay. Well, the credit, where I just told you, is a maximum of 3,000 if the child is 6 to 17, 3,600 if it's below. Of course, you have to have the expenses in order to get the credit. You have to have spent the money, and you might have a phase out. So there's no one answer for that. But if you already filed your taxes, it should have, well, actually, I don't know. I'm going to answer that as I really don't know. So you want to check with your tax preparer to see whether or not you should amend your filing, or if they're going to be sending automatic payments back. So I'm going to be talking about
I don't think there is an answer, Eric, because I've read some of those headlines where they're trying to figure out what would be the best way to automatically amend them, or if you're going to do it individually. So I think that's still forthcoming.
So we'll wait and see, I guess is the, okay.
I did have one other question that came in. Many families I speak with have not gotten their federal income taxes back. They have, however, received the stimulus. Does the stimulus negate the anticipated refund?
No.
Absolutely not. They have nothing to do with it. They're completely independent. I mean, you think about I'm like this Treasury Department is sending out $250 million checks. It blows my mind how somebody could be so organized and get this done. There's a lot going on. Plus, it's tax time. So I think we just have to be patient. I think you're probably going to get your refunds. It might be a little slower because of everything else that's going on, but you will get both your refund and your stimulus. They're independent of one another.
And then my final question, there's actually a couple of other ones. Related to the filing taxes, is the credit available already when filing taxes? I imagine they're talking about this year's taxes.
This is for 2021. So if you had childcare expenses in 2020, the old rules apply. You had to have $2,500 in income. It's a $2,000 maximum instead of $3,000.
Yeah, so all of this credit here will be for this year, 2021. So when you file next April, that's when it all comes into play.
Right. So that's why they can do the advance this year, because it's for this year.
Correct.
Gotcha. As an SS recipient, I don't need to file and have received 2 stimulus checks. I have 2 adult children in my home who are in college. Do I need to file this time around?
I don't think so. I don't think it changes that at all.
No, because I'm not sure I understand the question, because you're getting the stimulus check. So I don't know. I mean, you don't have to
change. I mean, you're on Social Security disability income or Social Security retirement income? And I don't really know that it makes a difference.
No.
Are you claiming the two college students as a dependent? It sounds like you're not.
No.
And if you haven't been, there's no reason why you would change that.
No, those children are hopefully filing their own taxes, and they get their own independent stimulus check because you're not dependent.
Yeah.
So I don't think
The next question I see here is, do you have, do you need to have expenses related to childcare to receive that child tax credit?
I believe you do. Yeah. Unlike the earned income tax credit, you get it. It doesn't matter. You just get it if you fall within the income. Well, and let's talk about that. So the earned income tax credit it's a it's a credit, it's a wage subsidy. So people who don't earn very much money can actually live above the poverty level. So it supplements what you're getting. The more children you have, the more earned income tax credit you get, and it's refundable. So even if you didn't have that tax liability, you're still going to get that money. You're going to get a check back, even if you didn't pay anything. And those limits have gone up almost threefold. The ages have been expanded on the top, upper end and the bottom end, and the tax credit has been pretty much tripled. And as I said, it doesn't matter whether you have children or not, you're going to get this money, but you get more if you have kids. But for the child tax credit, you do have to have expenses.
And circling back to that first question from the participant that mentioned SS, Social Security, they said Social Security disability, SSDI, and never claimed them. They also mentioned, I also offer care to my mom. I heard that the package for roads and jobs might help caregivers. Is that correct?
I'm not familiar with that. I mean, certainly as anything, you have to have dependent children to get the stimulus, but I don't know of anything in regards to that. Erica, do you?
Actually, I do recall reading something about if there's an adult that you are responsible for, there's something in the plan for that, but I can't put my finger on it. There's so much in this plan that I don't remember, but I do recall reading something about if you have an adult dependent in your home, there's something.
Yeah, that's something to look into.
Yeah.
I'm gonna just say these last two and then we can keep moving, but Julia is asking, do you get the earned income tax credit if you live alone without children?
If you qualify income-wise, yeah. Yep.
And then we have, you may have answered this already, but what do you do if you have not received your second or third stimulus?
Well, the first thing I would do is go to that or just Google IRS, where's my refunds? And it'll tell you like what the status is of that. I don't know.
Refund, Rachel, or stimulus check?
Stimulus, I'm sorry, not your refund, the stimulus. But it's called, wait, what did I say?
Is it Get My Payment?
If I Google IRS, where's my, oh, I wrote down where's my refund, but maybe it's where's my payment. Let me Google that. Maybe
Well, they've had portals on the IRS website where you can go in and put in your information.
It's right on the IRS website, and I did it yesterday, and it was very easy to. Where's my payment? It's where's my payment?
Okay. Not only that, Shai, when you file your tax return, if you didn't get your payment, there's a way to indicate you didn't get your stimulus check, and it gets worked out.
It gets reconciled in your filing.
Yeah, but you have to file taxes to do it that way.
Yeah,
and some people don't.
Yeah.
I want to move on just because for time. We do have another poll about
employment.
Yep. What is your current employment status? Full-time, part-time, unemployed, looking, not looking, furloughed, self-employed. That's a lot of statuses.
Yeah.
So before we get to this, so last week, we had the best numbers since the pandemic for job creation.
It's so great. We are going to get through this. We are going to get through this. It's such good news to hear that.
If that's any indication, then we will. Yeah. At the same, though, unemployment numbers are still really high, and families and people are still struggling. They're not back to work yet. And hopefully with the reopening of the economy, the employment number filings will go down. And, I think it's going to take a really long time to go back to any type of norm, which is why part of the relief package extended the unemployment benefits through September of 2021. And that includes the extra $300 a week in the federal stipend. And that will go through the end of the year. So in addition to extending that $300, they have declared that if you collected unemployment income in the year 2020, the first $10,200 is not taxable, but for federal income tax.
Right, because typically your unemployment is taxable, right? So they're made a little exception for this.
Yeah. Let's just take a look at this poll, because we made a comment when we did this poll a year ago that for the most part everyone on this call was employed, and now we have about half employed and about a quarter unemployed but looking, and 20% self-employed. So really 50, 70, 75% of the people are employed. So that again is another positive thing for the future and opening up our economy.
Right.
So back to the taxes though. If you weren't employed last year, you got unemployment insurance, $10,200 federal tax free as long as your income was less than $150,000. Employment income does not count towards that $150,000. That would be if maybe you had a spouse who worked and earned in excess of that. Then you would have to pay income tax on it. The state of income, yeah.
Okay.
The state of Massachusetts is extending that exemption only for filers that have less than a 200% income, 200% of the federal poverty level. So if you're a one-person household, that's $12,700. So $25,400. If you made less than that, then you also don't have to pay Massachusetts income tax, state income tax on that unemployment insurance.
Great.
One final thing about unemployment is that there has been a tremendous amount of fraudulent claims filed for unemployment. And lately, there's been a lot of text messages and emails sent to people saying, please verify what your user ID and password is on the unemployment portal. Never, ever, ever put those information on an email or a text. Only sign into the portal on the mass.gov website. Don't ever do it anywhere else because you're leaving yourself open to fraud.
Okay, I know we're limited for timers. So I'm just going to jump in quickly to our next topic, which is student loans. Just really quick, student loans deferments are still available. I know with the CARES Act, they deferred them through September of 2020. Well, those deferment opportunities are still available. And right now, the student loan deferment can go, or forbearance can go through September of this year. So again, I kind of feel like so many of young Americans have so much student debt, and I'm really grateful to them to have this opportunity to take advantage, because I don't feel like they get a lot of opportunities. Just a little bit of a side note here. I know we're kind of talking fast. The Biden administration, although this act doesn't provide any provisions for canceling any of that student debt, it is something that Biden talked a lot about. And so there is opportunity maybe down the road that up to $10,000 of student debt may be forgiven, or, it's still something that isn't for sure, but we're hopeful and optimistic. But we do note, if that is the case, that there have been some provisions that have talked about that being tax-free. So we'll see. Let's cross our fingers for all of you younger Americans who have so much debt, and hopefully we'll see some impact there. So I was really quick on that. So, and I know Erica, you wanted to talk about
Just housing really quickly. There was a lot of money carved out in the rescue plan for rental assistance. And most of it has been allocated to the states to do with what they see fit. It's not a give me. If you apply for assistance, you have to genuinely be like pretty much on the brink of being evicted. Although there is a moratorium on that, you can get assistance, whether you're a renter or even a landlord. As you know, if you're a landlord and you own an apartment and you have a mortgage on it, if you're not being paid, you can't pay your mortgage. So there's assistance for everyone if it's needed and proved. There's mass.gov has guidelines right on there. Or if you are having an emergency situation or don't have access to a computer, you can dial 211 and that will get you to the housing authority that's there to help with your issues.
Okay,
Yeah.
great.
And health insurance, yeah.
Yeah, so health insurance, last but least, I mean, I think the relief measures that policymakers enacted with this rescue plan, or in the past, I should say, never really addressed health insurance. And it's such a huge expense. When you get laid off from your job, you have to pay COBRA, and COBRA as an individual, I mean, it's good because it allows continuation of your insurance, but you have to pay 102% of that premium when you are laid off. I mean, it's like exorbitant. That's a lot of money. So one of the provisions in the act was that between the month of April and September, 6-month period, if you get laid off, you do not have to, there's going to be subsidies for COBRA. So you do not have to make that payment. Your employer will be subsidized by the government, 100% of that. So again, another opportunity for you to have healthcare. I mean, this is a health crisis, right? This pandemic, and to not have offered any sort of subsidy on health insurance, just interesting. I mean, I guess whatever. It makes complete sense to me now that you would offer that. We were going to do a poll question, but I think in the sake of time, I just want to, there were some true and false questions, and I'll just, you may or may not know that if you have to get your COVID shot, and I know Erica, you and I we are scheduled for our shots. It's good. We are on the back end of this. You get paid time off to get your COVID shot. Please know that. I'm sure your employer does, but you can get paid time off. You're allowed paid time off for that. And also, if you have an HSA, a FSA, a flexible spending account, you can use that account to buy masks and sanitizer and things like that. So keep that in mind. I mean, hopefully we won't need masks for much longer, but
I'm going to always wear my mask.
no, right? If you need your summer mask versus your winter mask.
I'm buying anyway. On all my trips that I'm putting my stimulus money towards.
That's right. That's right. So just a few little tips and tidbits there. We have just a few minutes left. I don't know, Shai, if there's any more questions. We'd love to just use this opportunity to address any questions as we rush through the ends of that, but we had so much information to share.
I had 2 questions come in.
Okay.
We have, well, this question is about taxes. I filed taxes. I haven't received my money. Is there any idea why the IRS may be taking forever?
Because they're really busy.
Yeah, I presume you're talking about your refund. It sounds like some people are not getting their refund right away. Again, you just have to be patient. Just think about there's 300 million Americans who have to file taxes and 250 million people who are getting stimulus payment. I applaud them for the work.
I would, some of the tax preparation places will give you an advance of your refund. I would try to avoid that if you could.
Do they take a fee to do that, Erica? I don't even know. Do they take a fee to have an advance?
I think they do, yeah.
I would be cautious of that, and just, hopefully if you haven't gotten your refund, maybe you've gotten your stimulus and that can kind of get you through. Yeah. You just have to be patient. It'll happen. It'll happen.
I had another question come in. Do you get paid time off to bring your elderly mother to her appointment to get the vaccine?
Well, that's a really good question. And, they did just pass that Family Medical Leave Act. And I don't really know the answer, but I think that's where it can be found. And I would think that, yeah, that would be part of that act. But, not every employer has adopted it. So you sort of have to check with your employer and see. But that's,
Yeah, check with your HR representative because they're going to absolutely know the answer to that and whether or not it's allowable within the organization.
any more?
And my final question right now, it says, while it's great to have these additional funds, let's keep it real. They only go so far with the cost of living. What, if any, resources are available for those who are looking to start a business?
There's a lot of resources. Is this a woman? Because if
I
it
believe
is,
so, yes.
yeah. So that's not our area of expertise, but I do know that depending upon what your demographic is, there's a lot of funding for minority-owned businesses.
Yeah.
And you want to go to the the business development, or if you're in the city of Boston, there's one specifically for Boston's general city area. Then there's also for the state, and there's a plethora of
resources and
services that will help you write a business plan. The SBA with the funding, the other grants, like the government, the state wants to give grants to minority-owned businesses if you're in that, providing services that they would be hiring. There's a lot of resources.
Yeah, that actually might be a good education program, Shai, for the OEE to do. It's actually a great topic.
Yeah.
We do have some resources on our My Financial Life page, which I'll drop the link for that in just a second. But it looks like we're just about 3 minutes out, so I'll leave the last couple seconds for folks to drop their last minute questions. I did get, I think that's more of an OEE question. Julia asked, are there any plans for doing this for seniors, possibly with AARP? I'm assuming to go over the American Rescue Plan, something similar to this program, but for seniors. I mean, there's no plans at this moment, but it's a good idea, and I think we could definitely explore it as OEE. And I'm seeing Elaine ask, I guess that paid time off question, is that only allowed for 50 employees and above, for organizations 50 employees and above, for paid time off for COVID testing?
I do know that there's a minimum employee requirement, number of employees, but I can't remember if it was 50 or I feel like it was a lower number, but I'm not sure. I don't remember. Again, talk to your HR. They'll know for sure.
And as you guys, well, thank you first. Thank you both so much for taking some time with us this morning or this afternoon to go over this American Rescue Plan and all of the different changes that came with it. Thank you all for joining us. Again, next week, we'll be talking about deciphering those financial aid award letters. And we're always coming up with more money talk, so stay tuned and stay up to date by following us on Facebook, Twitter, and we also have an OEE newsletter that goes out quarterly. I'll make sure to drop some of those links out for you guys. Again, if you guys have any questions or concerns, you can always email us at moneytalk@tre.state.ma.us. And again, we do have a lot of resources on our My Financial Life page, which I'm dropping in the chat here now for small businesses. If you want to learn more about specific topics, please take a moment and check that out. And without any other questions, when you guys do exit out, please take the survey, and we'll see you next week.
Thanks, Shai. Great job.
Thank you, everybody.
Thank you for having us.